Welcome back to Chipstock Investor. Today we're going to be talking about solar energy company Enphase, and it's looking pretty ugly out there, isn't it, Nick?
Pretty simple, straightforward, and accurate way to sum it up for sure. And as we were preparing this episode, Kasey, I think the point you kept coming back to is it's going to get worse before it gets better. I think we know how bad it's going to get in the first quarter of 2024, but that's 3 months away from now. Okay, let's assume this is the bottom for Enphase, for their sales and revenue. But I think the bigger question that we'll now address in this segment is how quickly and how much is the business going to rebound? That's what we have to focus on at this point for anyone interested in investing in Enphase Energy.
If we put Enphase into a segment into our semiconductor industry flow, it would fall into this specialty energy and equipment portion of the semiconductor industry. Now, normally when you think about this portion of the industry, you think about a lot of power companies that provide services, equipment to semiconductor companies, enterprise markets. However, with Enphase Energy, they are primarily selling to the consumer market. Enphase is selling to residential customers as well as maybe to a lesser extent, small commercial customers.
Yeah, but I think it's a notable comparison, Kasey, because while this is not an enterprise facing business, we can think in a lot of ways of the home turning into a type of tech hub in many ways. A growing number of consumers buying electric vehicles or some sort of hybrid or plug-in hybrid. Of course, tons of tech devices, the whole home becoming a sort of connected space, electronic and computing device-filled space. And a lot of consumers interested in, let's not call it solar power for the sake of reducing carbon footprint. A lot of people just simply interested in self-sufficiency, cutting their utility company out of the mix, at least in part, and maybe even getting a check back in the mail from your utility company. Of course, there's some hiccups with that. Big market for Enphase Energy has been California, and we have a transition from NEM 2 to NEM 3 that is really clouding the market for Enphase. Sorry about the pun, but that's the comparison. I think it's a good one that you draw there using your semi-industry flowchart. So let's maybe talk about the ugly numbers that you mentioned, Kasey.
Financial highlights for Enphase Energy. Quarterly revenue was just over $302 million, down 58% year over year. GAAP gross margin of 48.5%, non-GAAP gross margin of 50.3% with the Inflation Reduction Act benefit. Operating loss of $10.2 million, net income of $20.9 million, which was a decrease of 86%. Free cash flow at $15.4 million, 94% decrease year over year. They had $237.3 million in free cash flow last year at the same time. So, as we said, the numbers are ugly.
Yeah, not great. This is very reflective of the pandemic and maybe after effects of the pandemic. A lot of consumers with a lot of excess cash, many of them pouring it into their home, into upgrading their home. And there was definitely a boost that Enphase got from this. And now that's coming off the table. I think basically what's happening here is an unwinding of those effects and hopefully setting the stage for more normal, I guess we could say, growth going forward. One note here, Kasey, that you mentioned there's an operating loss, but net income. So at the end of 2023, a slight year over year increase in their ending cash and equivalents and short-term investments of $1.7 billion. Good news here, they do have a sizable chunk of debt, but net cash and investments, earning interest, and that interest income on the balance is primarily why they still generated positive earnings per share in the quarter. So just a bit of a note there before we move on to the Q1 2024 outlook. This is where things are going to get worse.
Yes, at the midpoint, revenue is expected to be $280 million. That's an implied decrease of 61% year over year. GAAP gross margin will also decrease 42% to 45% with that IRA benefit. Basically, looking at the outlook, all of their financials all point to the suggestion that this company is going to be operating in the red next quarter.
Yeah, the loss is probably going to steepen. But the good news is it seems management thinks the first quarter is the bottom before a gradual recovery. And again, I think you summed it up nicely when we were discussing this and putting together our notes. What is this outlook basically anticipating? Because California is a bit of a mess right now with that NEM 2 to NEM 3 transition.
Based on this very difficult transition that California is making to that NEM 3.0, Enphase is really hoping for a rebound in markets outside of California, especially outside of the US. They mentioned Netherlands, specifically the UK, Italy, Germany, all of these European countries. They expect these countries to start to turn around and make some growth for Enphase.
Yeah, many of these new markets for them. Over on our Discord channel, we are having some evolving discussions around this. In the past, we've also discussed SolarEdge, a competitor in the inverter space. They specialize in string inverters versus Enphase's microinverter technology. And SolarEdge has a larger, sizable exposure outside of the US versus Enphase's primarily US-based market at this point. Also, SolarEdge, a bit of a play on utility scale solar versus, again, like you mentioned already, primarily residential consumer business for Enphase. But I think the long and the short here is it does appear that the company will return to growth. At least that's what the outlook appears to be saying. But the company not anticipating California, which is possibly a quarter of the US revenue, maybe more at the peak. California maybe not contributing to this rebound, at least not yet, as it works through some of its changes in consumers being able to sell back their solar power to the grid. And you don't have to look very hard on the internet to find a lot of angry homeowners in California about this, some accusations of crony capitalism and utility companies being able to shift things around so this benefits them again instead of consumers. Growing pains for sure for the solar market, but possibly healthy growing pains though, as again, big market in California, at least temporarily going away, but the solar industry continuing to figure out how to make money and how to do so profitably without excessive help from government subsidies. So possibly at the end of the day, a healthy business transition taking place for Enphase.
In the meantime, Enphase is tightening their belt, so to speak. They mentioned on the earnings call that they have ceased operations at their factories in Romania and then also Wisconsin. They are consolidating some of their manufacturing facilities, especially in the US because of that IRA benefit.
Yeah, some near-term pain for sure. Never a good thing to see a contraction in operations like this. I think, short story, they maybe were a bit too optimistic in expanding their manufacturing capacity with some of their third-party manufacturing partners. A pullback there, that's not great, but I suppose a needed move for the company's near-term financial health.
Let's talk about those financials a little bit more. The stock is still not cheap by a lot of metrics. Let's talk about analyst expectations over the next few years and where that puts the stock valuation.
Yeah, let's show that. Our ticker terminal here, Kasey, 2 slides from it. First, you can see the consensus for revenue, a 29% decline for full year 2024. That's pretty optimistic considering what was the outlook again for Q1 2024?
Yeah, down 61%
Okay.
in Q1.
So if that's management's outlook for Q1, analysts think full year declines are only 29%, 30%. That implies Enphase at least getting back to even by the end of the year with where they were in 2023. Okay, fair enough. Seems a bit optimistic to me. And then second slide, again, you can see here on earnings per share, free cash flow, expected to decline, earnings down mid 40% range, free cash flow down about 20%. Kasey, you said, I think it's a safe, very, very safe expectation that the company operates at a loss in Q1 for certain, maybe also in Q2, although there's no specific guidance on the spring 2024 quarter. But to expect this company to make a big rebound like this and start generating positive earnings, not just positive earnings, but robustly positive earnings and free cash flow by the end of the year, maybe it's justified optimism. Because one good news here is Enphase is undershipping to what current consumption is of their inverters and of some of the other equipment, the batteries and whatnot. But you mentioned the stock actually rebounding again here in the wake of this report. I think the market very optimistic, and this for us is maybe a be patient stock. Wait and be patient, and let's see what happens in the coming months. I wouldn't at all be surprised to see the stock take another tumble ahead of the actual first quarter 2024 report in May in a few more months' time.
Yeah, I'm afraid I agree. I like this company. I like the tech, but it's a little scary right now for me.
You can YOLO into this if you want, and it very well could pay off, but this is just our personal style. This isn't one that we're comfortable with yet at this particular point for all of the reasons mentioned, but enough good stuff happening that we're optimistic and continuing to cover it. There you go. Hit us up in the comments. And again, more details on this emerging in our Discord channel, which is brand new and only $5 a month. Or you can check out our a la carte notes on our Ko-fi shop. There's our plug. Arista Networks is next.
All right, that's a wrap on this video about Enphase Energy. If you have not subscribed yet to the channel, please do so. Hit that subscribe button and make sure you have notifications turned on. And as Nick mentioned, check out our membership where you have access to our Discord channel, as well as all of our show notes that we publish and some extras too. See you all again soon at Chipstock Investor.